Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, January 29th, 2019. Well, folks, Apple reports earnings after the bell today, so I figured what better time to do a little analysis on the chart. First off, going into earnings, if you're going to play it long or short, it is always extra risk you're taking on because you really don't know what the guidance is going to be, what they're going to say about China, what they're going to say about their current business and their subscription business, all these little nuances that could affect price up or down. Having said that, the chart can give us a little bit of insight, and that's what I want to do today. So first off, if you look at this chart, the chart is still oversold, right? So from pivot high to pivot low, the only bounce you've gotten here has been a very minute bounce. That's compared to the QQQ chart. If you take a look at the Qs, look at the size of the bounce in the Qs. So you see Apple's been lagging. So the question is, can it play catch up? And we will find out today. Going back to Apple, a couple other things that get me a little bit more bullish, at least for the near term. And that is mainly that you're starting to see consolidation. So look at how you broke above the 20 moving average right here. You went up, then you came back, tested the 20, and you held. Then you went up, and then you kind of retested, and now you're kind of floating. What this is creating is a little bit of bullish consolidation. And obviously, bullish in the title means that it's a positive going into earnings. The other thing I think is worth noting is that Apple gave us a warning not too long ago. I mean, that's why this gap right here exists when it gapped down. Now, the key is that if you think about it logically, Apple warned. They're not going to warn and then come out with a horrible quarter that misses even their warnings and is worse than their warnings, in my opinion, at least in my personal opinion. In my opinion, they're going to come out with at least equal to what the warning said. So that means if it's equal, maybe it trades down a little bit, but probably doesn't break the low. But my guess is they kind of told us a little bit worse scenario than what actually will happen. And companies often do this, is they'll say, oh man, it's not really looking good, because they know their stock price is going to get hit regardless. But then if they come out with earnings and it's a little bit better, maybe the stock price reacts positively. So again, with a slight edge, all right, and again, I don't recommend anyone really playing it into earnings specifically for earnings. If you like the long-term story and you want to buy it here, that's a different story. I think that's okay. But with a slight edge, I would say it's favoring the upside. Bullish consolidation, still lagging on the bounce. The 50 MA is lurking. That's my target right there, which is right around 164. So it gives you possibly $8 of upside on the stock in the next few days after earnings or with earnings momentum. And ultimately, that's what I'm leaning towards. And again, your risk, just, you always got to understand your risk. Your risk is a double bottom here. It trades back to double bottom. I would say if it closes below double bottom on a daily basis, then you exit the trade. I mean, that's really your bogey level. That's what you don't want to see it close below. As long as it holds that level, then this pivot low still is holding, and on a technical basis, that's a positive. All right, one other stock I wanted to go over is FISV. Let's take a look at that one here. FISV, if I can type it in correctly. This, we bought put options yesterday. And again, one of the keys here is the time count. You had a beautiful time count, extended move. This was a no-brainer in my opinion. What you can see here very, very clearly is that the stock basically went up to its longer-term trend. You can see right there, kissing that trend line right there. And again, with the time count, which is a PPT methodology point, you could almost guarantee yourself a profit here, and that's what we're seeing today. So those options, those put options are paying off pretty nicely today after we picked them up yesterday. And again, to be honest, I think you're going to go back even more. I think you'll pull down all the way here on FISV. But this was one of those chart setups that I just love seeing because of how beautiful it is. I mean, it is just, the extended move, you figure it's not going to go up too much more in a straight line because it's gone up in a straight line already for 7 straight days. We know time counts, we know that kind of stuff, and therefore it gives us a great opportunity. So on that note, I'm going to bid you farewell, but come join us at InTheMoneyStocks.com. If you're interested in swing trades, join the Research Center where you get videos daily, you get live swing trades, etc. There's a 7-day free trial. If you're more into options like FISV here, take the options alerts. There's no free trial for that, though. Or if you're a day trader, come join us in the intraday stock chat. So far, we have batted 100% in the intraday stock chat this year in January 2019. Last year, we batted 94% success rate, which is unparalleled in the industry, by the way. It's amazing. All right, guys, have a great one. I will talk to you soon. Take